Good morning, everyone. It is September the 19th, 2016, and I hope everybody had a great weekend. It was really hot here. 85, 88. We're supposed to be in the 90s through Thursday this week. I hope they're wrong. I'm definitely ready for cooler weather. Come January, February, I might be singing a different tune, but I do like the four seasons. You get tired of winter, you get tired of summer, spring, and fall. I don't ever hear anybody complain about. In fact, most people say fall is their favorite season of the year. But anyway, hopefully the weather cooperated for you all, wherever you might be. Okay, today is the start of FOMC week. It tends to freeze the markets. Stocks tend to rally, especially starting on Tuesday into the announcement. Treasuries tend to be sideways, waiting for the announcement. They run the long end down. The short end is holding up pretty well, and you can see that in the knob spread. And the reason for this is that on Thursday, I believe it's Thursday, Japan will announce their monetary policy. Japan has been the leader of the quantitative easing game and negative interest rates. And so they think, and the long end of our bond market has certainly shown this, is that Japan's going to quit buying the long end and put all their quantitative easing into the short end. It's called the twist. Our Fed has done this once too. So right now, the long end of the market is being driven by Japan. The short end of the market is being driven by perhaps what our Fed might do. Thank you, Charles. Yeah, I think it is Wednesday. So anyway, that's where we are. The 10-year is lower, but nothing like anywhere close to what the 30-year is. The 30-year is off over 7 points. So going into Wednesday's announcement, the FOMC announcement, just based on the amount that the treasuries have sold, you'd be long treasuries into the announcement. So here we are. The housing market index is at 60. I don't think anybody pays attention to it. So I think we're just going to be range bound. We're going to be probably buying the 130.08s or better, and we're probably going to be selling 130.24s or better, the way that it stands right now. Very square distribution. Volume-wise, it was leaning B. It's still leaning B. So our first sell is this 16 to 20 area. That's sell 1. And our second sell is 23 to 27. Again, just playing for a trading range. On the buy side, 5 to 9, because we do have the volumes in the bottom half, buy 1. And then 01s to 29s, buy 2. And we're liable, these numbers could hold through Wednesday's announcement. Okay, looking at the 30-year, knob spread has widened a little bit, but not a whole lot. So first resistance is going to be 28 to the buck, 3 to 7 sell 1, 15 to 19 sell 2. On the support side, 16 to 21, 9 to 13 buy 1, 29 to 01 buy 2. Gold's up a little bit. Not a lot. And imagine in gold they're assuming that the movement by the central banks will be inflationary no matter what they do. Same situation we have been in. Basically a sell against 20 to 25 and a buy in the 10 to 15 area. So 19s to 21 sell 1, 24, 26 sell 2. On the buy side, 10 to 12 buy 1, 5 to 7 buy 2. Looking at the euro, the central bank of the European Union and the Bank of England have both moved. So it's down to what the Fed does in the Bank of Japan. Market's been sold. Got a chance for 50% retracement, getting back up to this 1250 area, but right now we have a seller at 25. So sell 1 is going to be 15 to 25. Sell 2 is going to be 40 to 50. And got a chance to trade it lower, so let's put out an 1175 for buy 1 with a question mark at 90. And then 1150 for buy 2. Everybody's all excited about crude. There's an interim OPEC meeting on the 28th. I believe that is the date. And rhetorically speaking, they probably won't say anything to hurt the market. They'll talk in terms of, they'll talk up prices, but when it comes down to doing something, if Iran's not on board, nothing's going to happen, and they're not on board. Sell 1, 44.50, 44.75, 45, 45 and a quarter. Sell 2. Pretty clean break right here in the market at 44.75. On the buy side, we've rejected prices below 44, so 43.75, 44 buy 1. Then 43, 43 and a quarter by 2. I think we bust the 43.75. Ultimately, I think we're going to 42.50, but it'll be pretty easy to get down to 43. Okay, the E-mini tends to rally into the FOMC announcement, especially starting on Tuesdays. My feeling is the Fed's not going to do anything, especially given the most recent economic news. They'll keep the status quo, and they'll so we got resistance at 45 to 50. We are pointed higher, getting stops above this over here, that high. So 44, 46, sell 1, 49.51, sell 2. On the buy side, they broke it out at 38. So 35, 37, and it may take 40s to get in. I mean, we'll put a question mark at 40 for the long side. They've made us pay up, then 30 to 32 for buy 2. Housing market index is expected at 60. I imagine it'll come in at that. Monday's into an FOMC announcement. Sometimes the stock market can sell, but usually the idea has been the Fed's not going to mess up a good thing, so they won't do anything to hurt the market, and that's why the market usually rallies into the FOMC announcement. Okay, it's going to take a bit to get everything up and completed. I'm going to get busy on that. I will be with you as soon as possible.